We're going to talk about one of the most important things to ensure your long-term success in trading. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and today we're going to be talking about taking responsibility for all of your actions in your trading. Really important and critical that new traders, old traders, if you've been around for a long time and you've been successful, you probably already understand this, or you wouldn't be successful. But it's important and critical for all new traders to understand that they are responsible for all outcomes in their trading. Now, I'm not talking about profit and loss, but what I am talking about is you yourself being in the markets. You need to be aware of all the potential pitfalls, good and bad, and take responsibility for that. Not shifting the blame to the market, to somebody else, to the brokers, and understanding that if you're in the markets, you're fully responsible for everything that happens. You're the person who decides of when to buy and sell and when to be in the markets. And outside of that, those parameters, that whatever happens, it's still as a result of you deciding to participate in that market. So you are responsible, and that's what you need to fully take on board and be vested in that, regardless whether you're winning or losing. Number one, there's only two possible outcomes when you enter a trade, and that's either having a gain or a loss. So that part of the market and the trading itself, the outcome, is completely outside of your control. So, if you're trading with capital that you can't afford to lose, you shouldn't be in the market. If you're trading and you're blaming the broker because you got stopped out because it was a false break, or they ran your stops, or the bank ran your stops, whatever that is, it's still your responsibility. You decided to participate in that market. You have to accept that all the capital that you're in there with, if you lost that tomorrow, would you be okay with that? So the gain and loss are completely outside of your control as a trader. But number two, the one thing that you can control, which is totally within your control, is the execution of your trading plan. Now, what's important about that is, again, the 3 M's. Methodology, money management, and your mindset. And number one, what methodology employs is that you have an edge. So that edge has to be tested, but it has to be forged through your own confidence in understanding that edge, in knowing how to execute it, not having analysis paralysis or variables that will interfere with your decision making in terms of executing that trading plan. So it has to be cultivated and honed by you through hours. I talk about this in my 7-step daily routine for high performance traders. If you haven't gotten that yet, go to my homepage and download it. It's about creating the daily disciplines that will forge the skills, the mental toughness, the confidence, and the discipline to master the markets. Now with that, you need to hone the edge, and the edge needs to be crafted through arduous study and deliberate study in reproducing those live trading conditions regardless of the time frame that you're trading on. So number one, you have to have that edge. The methodology has to have, number one, how many times is it going to present? Does it give you enough trades that it's going to generate the capital that you need to give a return on your account? What are the risk control parameters in your money management plan? So number two, money management. I talk about this all the time. It took me years to really fully grasp this, because I was focused on finding the holy grail of entries and exits. Traders, new traders, the bulk of losing traders focus on trying to find the ideal entry and exit conditions when they should be focused on, number one, managing their risk. So if you understand that your job is to manage your risk capital, honing your edge becomes easier, because then you can step back and look for asymmetrical risk-reward opportunities. I've encouraged people to read Peter Brandt's books, read Schaubacher, learn about measured moves, learn about the longer time frames and these breakout patterns that can occur where that skews the odds in the favor of the retail trader. So if you're day trading, the odds are heavily stacked against you having any long-term success in the markets, which is why 99% of traders fail. So number one, methodology. You have to have the edge, and you have to sharpen that, hone it, practice it, work on it, know it intimately. Number two, you need to have your money management rules down tight so that you can ensure you're never going to destroy your trading account, but you'll also be, number three, emotionally orientated in terms of your approach to the market. So you're not approaching the market tied to the outcome, worried about winning, worried about being right, worried about trying to prove something to the market. Every trade is just another trade, and when you employ proper risk management and you're seeking asymmetrical risk-reward opportunities, losing trades mean nothing to you. It's just another trade in a continuum of data points in your trading history. So the gain and the loss of the individual trade itself is outside of your control if you've executed your trading plan. If your trading plan has a positive trade expectancy and you have an edge, you need to know that edge intimately, especially if you're a discretionary trader. If you're an algorithmic trader or a systems trader with computerized systems, that's a little bit different, but you still need to understand that intimately, because even system traders can interfere with their systems because of emotional disorientation. And then so number three, being emotionally orientated, having a reasonable expectation of what a reasonable return should be. Having the discipline to stay in the trade so that you're not taking small winners and larger losses. You know, getting the return on those trades where the asymmetrical risk reward setup is giving you 3, 4, 5 times your risk on your average trade. So don't be emotionally attached to the outcome of the individual trades. Focus on the execution, the flawless execution of your trading plan. That's within your control. Hopefully you got some value out of today's video, traders. Stay focused, stay disciplined, focus on flawless execution of your trading system, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.